Where are you looking for growth right now as the kind of the volatility in the auto industry starts to rise?
Well, thank you very much. Schaeffler is a global automotive and industrial supplier. And the current trading has just shown how important the and industrial supplier is, because we have seen better business conditions in the industrial environment than in the auto environment. You saw this from our last announcement. We confirmed our guidance on the group level. We had to decrease the guidance on the auto level, but we were able to increase on the industrial side. And that's positive because it shows that our business model is robust. On top of the two divisions, auto OEM and industrial, we have a third division that is our automotive aftermarket division, and that is typically quite resilient in terms of changes in the environment. So we feel good about our group guidance, but we are clearly concerned about what's happening in the automotive markets at the moment. It looks like that this is short term, but again, we need to adjust, in particular in China, because there the sentiment seems to be negative at the moment.
Well, what is your view of the automotive industry? Because it's definitely one that's going through change. There still has been demand it's not low, it just seems to maybe have peaked to some extent. But we're going through this sort of rebirth of an industry as electric cars really come to the forefront. Is that happening, or do I just sort of am I dramatizing that a little bit?
No. Look, the industry is clearly going through significant transformation. The transformation comes from the CO2 regulation that becomes tougher and tougher around the globe. It comes from change in customer behavior. It comes from sort of new types of technology. Our automotive division is predominantly a powertrain division. We are very good with the traditional powertrain solutions like combustion engines, and we have entered into the race for the e-mobility solutions. On the e-mobility side, we distinguish between the pure battery electric vehicles and the hybrid vehicles. We do believe that for the foreseeable future, there is a trend towards hybrid, because our large customers need the hybrid to solve the CO2 regulation puzzle they have.
Well, and it makes a lot of sense to solve the range issues as well.
Correct.
Let me ask you about the broader industry in terms of what's going on right now with trade. Let's talk first about Brexit, because they're just finishing up in Salzburg. We've heard from other producers like Mini, for example, that they're going to have to close the factory for longer than they normally would because of Brexit. How do you see that working out? I mean, getting your parts across borders, dealing with tariffs that might arise. I mean, what's your visibility?
Well, we are Europeans, so we like the United Kingdom, and we would like to have them still in and being part of Europe. That's my more general statement. For us as Schaeffler, Great Britain is not that important. We are not exposed to significant risk there. We are a supplier, so we need to follow what our customers think. We see with concern that the final plan is not really visible, because for a company like ours, we need to adjust and we need to prepare for what's going to come out of this. So the uncertainty is a problem. And I do hope that the negotiations and the talks will lead to something that we can rely on.
What about the uncertainty of global trade? I mean, you are definitely a global company getting revenue from all over the planet. Amidst this trade war of President Trump's, how is your visibility there?
Well, we can only hope that the trade war doesn't further escalate. We like open borders. We like fair trade. We have a global supply chain. And we clearly would hope that, in particular between China and the US, this calms down. Maybe there's a chance to further lower tariffs. That would be good for everybody. Once again, as Schaeffler, in particular in the Chinese and US situation, we are not that exposed because we are very much localized in China. We have a localization ratio of more than 80%, and we serve a lot of local Chinese customers from our plants in China. And that, lets us with an exposure that is definitely bearable for us.
What's the feeling you get when you look at, so that's great, 80% localization is incredible, and that helps you obviously not to sort of limit your exposure. Yeah. What's your feeling, what's your take on the EU-US? I mean, you say the possibility of lowering tariffs would be great. Is that a possibility here?
Well, it's difficult to predict. Let me finish on the sentiment. The problem in China is the sentiment. And what you saw now in August, also what is continuing in September and may impact the fourth quarter, is that there is negative sentiment. And I think the trade war, the tariff discussion fuels this. So it would be important that we get a clearer picture there and understand what's really to be expected towards the rest of the year. We think positively, and we hope that the responsible politicians and parties will come to terms on something that business can rely on.